This is Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with their closing grain and livestock comments for January 31st, 2017. Corn market finished the month up 2 cents. Beans up 1 3/4 to down 3. We had old crop beans up 1 3/4. New crop down 3 cents. Chicago wheat up 4 to 6 cents. Minneapolis wheat down 2 to 3. And Kansas City up 3 to 4 cents here on this last day of the trading month for January. As you look to the overall tones, you're looking at corn market and wheat market that are trying to build a little premium in front of the all-important crop insurance origination for spring during the month of February. So that'll start tomorrow. That'll be our first day, and that'll be average over the course of the month of February. And we'll watch that very closely. But closing the gap a little bit, we saw that corn and wheat strength, partly off of a little bit of anticipation of a strong dollar. We had that down 80 to 90 cents for a lot of today, so the hope is we can see some exports show up. But equally important is that bean market that's had a little more negative news around it, had a very lengthy fund build over the last 2 to 3 months. And now is dealing with some liquidation. So beans kind of really rule the roost as to whether we can stand corn and wheat up a little bit more. If beans got a little bit, I think that corn and wheat market could really get going. But if beans continue to slide and break down here, corn and wheat may just find this as home here in the near term to at least try to set a little bit of average and close the gap here. So watch those relationships very closely. We'll also be watching the Trump policies here as they unroll out, and also very important, the managed money flow, which has been, I think, a big part of the liquidation. Argentina forecasted to get some rain here, and that's what's also adding to the negativeness around soybeans right now. As you look at the feeder cattle market, down 112.5, live cattle down 35 to 65 on average today, and the hog market up $1 to $2. So what's going on in hogs? You've got strong cutouts, strong exports, just a good looking market that may very well get up here and challenge $80 off the summer month hogs. The nearby contract's a little more of a wild card based off that cash index. As you look to the cattle markets, a weakening market, very negative technical action off the cattle. You look at the overall tone of another cattle and calves semi-annual report that reported 102%. Versus 101% expectation, so 1% greater amount of cattle than what we had last year on anticipation. So again, that's 2% more than we had last year, 1% greater than the 101 expectation. Again, the report gave us a 102% on the semi-annual cattle inventory, and that's going to be another negative number. So cattle may be looking to run here a little bit, bean market doing the same, and corn, wheat, and the hogs trying to just hold some premium here. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results.